maybe they have been acquired. It's important that the tax relevant information is delivered and maintained within the organization, and that needs to be clarified or discussed at the SPA level. Then, during the pre-completion stage, at that point when you are making the deal, it's important to make sure that someone takes responsibility of ensuring that there's continuity in compliance. Because sometimes during that stage, when the others know they are going out and others are coming in, then there could be laxity, which could lead to tax risks. Then the right to review the returns is key, so that whoever is taking over has clarity on what is happening, even during the pre-completion stage. And the right to participate in tax disputes. If that can be allowed, then it gives you more clarity on whether the provisions and the information that is being given is accurate. Then at the deal structuring level, it's important for us to understand whether it is an asset deal or a share deal. If it is an asset deal, then from a VAT perspective, there would be most probably VAT applicable. Because when there is a sale of an asset, generally in most jurisdictions, as long as that asset is vatable, VAT may apply. There are few instances whereby if it is that asset is part of a business, then it may be taken as a transfer of an ongoing business. For example, you are acquiring property, a commercial property from the business, that could be taken as a transfer of a going concern, which then may be VAT exempt. But generally, on the whole, VAT would apply. And if it is a share deal, in most cases, VAT may not be applicable. But there could be instances that it could be applicable. So as you go into this, it's important to check what kind of deal are we going to have and what kind of taxes are we going to be exposed to. Then the other tax attributes that we may need to look into is the past tax liabilities. If it is a share deal, the tax liabilities and assets will be taken over by the new owners. So then it's important for you to ensure that your due diligence at the due diligence level, you have clarity of the liabilities, and then ensure that the provisions that are being made and the indemnities and warranties are very, very robust. If it's an asset deal, generally, there may not be so much of an exposure from the past, but there are also instances whereby the liabilities may move with the asset. So, still, it's important to be careful. Then when it comes to other non-tax reasons, but which have tax implications, in a share deal, you may not have a lot of issues on employee taxes. But in an asset deal, the employee tax issues may arise, because in that instance, where it is an asset deal, probably certain employees may be taken on, and they may need to move with the asset. In which case, then, you may have to terminate their employment contracts, whereby then you have to pay terminal dues. The way terminal dues are taxed is not the same way normal employment income is taxed. And it's important to check how best and what are the requirements within the laws that govern taxation of terminal dues. Then, in an asset deal, you have an opportunity to cherry pick assets under that kind of transaction, which is not possible in an instance of a shared deal. So, if you can cherry pick assets, then it's important to know what liabilities may go with those assets. For example, if it's a building or a property that you are acquiring, then it's important to know that from a tax perspective, you get all the information regarding the capital allowances relating to that asset. Because in that respect, despite the fact that it's an asset that you're taking out, the tax written down values that you are taking on will only be checked for their accuracy, even if it came out of another company and is going out. You cannot claim capital allowances as based on the new consideration. You will have to claim capital allowances that have been passed on from the previous owners. Then the other aspect to consider as you structure your deal are the holding co-jurisdictions, in which case it is important to check where you are going to hold this